Welcome back to the Aria Finance Specialist Scoop podcast. I'm here joined this time with Colin Horton from Project & Co Surveyors, a leading surveying brand in the business, and valuation is such a hot topic at the moment for borrowers, lenders and brokers alike. Really good to get your insight. Thanks for coming, Col.
No worries, mate.
Colin, for those that don't know you, maybe don't know your business or don't know sort of your standing in the market, tell us about you. How have you got into this and why valuations?
Okay, I'll try and condense it or bullet point it as much as I can. I fell into valuation, fell into asset management, and grew my career in that space, predominantly specialising in leasehold enfranchisement, which is very niche and very boring. Government got involved and that market just went completely quiet. So I had to evolve, and there was an opportunity in lending that I just thought, do you know what? It could be done better. I decided, do you know what, I'm going to give this a go. Obviously, I don't look like your atypical surveyor. I don't talk like one, that's for sure. And, you know, I'm not from, London. I'm from Essex. And there's a little gap. And we basically just went guns blazing on marketing, absolutely smashed LinkedIn, and just delivered really good service, really quickly, really efficiently, and just focused on communication. Fast forward to now, we won the Bridging and Commercial Awards Best Surveyor, which was absolutely huge for us in our first year of doing this. I got in the Bridging and Commercial Power List, which was also amazing, and they gave me a great photo, which was even better. And we're just really trying, mate, to really kind of make headway in what is a really difficult sector to infiltrate, as in a sector where there is so much risk.
Yeah, and also so established people can be really stuck in their ways. I see that from a finance perspective too. How quick was the learning curve then in a sort of first full year of trading? How, if you look back from month 1 to month 12, how different are you guys?
So the actual business itself has been going for 6 years, and we hadn't done valuation. We were just focusing on building pathology and everything that comes with that. I thought initially, we actually originally jumped into it probably about 2 years ago. And I thought, I can do secure lending. It's just red book valuations, easy peasy. Got enough kind of capital in the company to invest in some good people. And I'm very blessed. I'm very good at selling myself. And we have to get people from your big kind of corporates. That's what I told myself. And we cherry picked some really good people who I trust wholeheartedly. And that was it. We just went to town, mate, and we just started just meeting people. Brokers were a big thing for us, because brokers, my fiance's a broker. You guys go for a hell of a lot, and it's difficult. And, I think brokers have cried out for years for valuers who are there for them as much as the lenders. It's not, you guys ultimately choose us on the panels, Let
me bring it back. One thing that was really interesting is you're talking about, from the outside, you've looked at valuers maybe not being able to be held to account on their figures and justifying it. How are you doing that differently? What's the tone of Project & Co that maybe we don't see elsewhere?
My tagline, which I think I've tagged now for nearly 2 years consistently, is every single day is surveying personality, and that's been a big thing for me. I think having the ability to communicate with brokers and lenders, and a deal comes through. What a lot of time we'll do with our broker clients, or say clients or referrers, is they'll come to us initially and say, "Cole, I've got this deal. Can you have a look at it?" And I'll have a look at it, and if I think it's crap, I'll tell them. I was like, don't do it, this deal's rubbish. And I want to help make a difference in the sector. I want lenders to lend well, and I want you guys brokers to earn a lot of money. And I think we are such an important cog in our ecosystem that I think us as valuers forget that. And that's why I was so passionate about just trying to change it.
I've always looked at the whole specialist lending proposition is a puzzle. And it's a jigsaw, and you don't solve it with one element and one arm. And that includes, I'm reticent to use the power term phrase because I don't love it, but it's not just about having good tax advice and good legal team behind you, but your lending, valuing, broking services have to align, have to fall into place correctly to make a deal work. And it's not just about getting the numbers right, it's about the pace, about the delivery and the execution of that. And, that does take, beyond all else, what it takes is good communication. Because I do agree with you that the down valuation term is funny. I've not thought of it. You're right. A valuation is a valuation. The down val is in the eyes of the beholder.
Correct.
But with good communication early and justification of why does a borrower think it's worth X? Can they justify it? Have they got some comparables? Can the valuer immediately go, no, I can tell that's wrong. Well, that sounds okay. Let me go and look at it properly with my expertise. Can brokers catch that early? Can lenders say, no, that's a nonsense? And can we make that journey more painless? And it does take everybody. It's not just one person, right? So you have to work with a lot of different people in the system. How do you manage the balance between managing borrower, broker, lender expectations?
So, as a percentage, my day is mainly spent talking to brokers wanting everything urgent.
Right.
Urgent has really lost its power as a word, and I think valuers in nature aren't combative, in their personality types. They're not trying to stereotype, but valuers aren't necessarily the most outgoing people as a profession. So, having the confidence to be able to stand by your valuation and to tell a broker it ain't going to be like that, or to tell a lender it's not a great deal, don't do it. Or actually, I'm actually really struggling on the comps, but I actually generally do think this is worth what they're in a pan.
Sure.
And, it's really difficult. I mean, applicants, luckily, we don't have too much interaction with them. Luckily, and when we do have interaction with them, it's either on site doing the inspection. But a lot of time it'd be agents and stuff there. But, but lenders, from my experience with lenders and underwriting teams, the BDMs are great, but it's the underwriters that have all the power.
Yeah.
And you have to get on side with the underwriters. Underwriters will make a call pretty quick based on the quality of your reports and the style. And every lender has a different risk profile. So there are certain lenders that actually really want to lend money, and they're a little bit more risky.
Yeah.
And I say risky, just a bit more, commercially minded if you want to be.
It is funny how quickly, firms get a reputation for misvaluations, right? Even if they're not down, they're misvaluations. You get some of your high street types, and I won't name names, but people attached to more vanilla lending will go out and come back with nil values on great performing buy-to-lets or HMOs or assets that maybe have a slight flying freehold, or something unusual, and they go, no, not suitable for mortgage lending. Whereas a huge part of the market might be okay with that. You just have to pay for the right valuation, the right red book, proper report, not a I've driven past and I don't love it type of.
These guys, mate, they're doing 6-7 valuations a day. It's mainly on the term stuff. Bridging, obviously, it's, bloody hell if they're doing 7 a day, like on the high room, But and they don't care. They're emotionless. There's no, the reason I've got so passionate about it is because I was selling a property once, my own personal residence that I lived in. It was quite an obscure property in terms of that it was a converted post office, and it was like 3-floor flat, and there was no real comps for it apart from the flat next door. It sold, bang on, exactly the same. Anyway, the valuer came around and they knocked it by like 50 grand, and it sold on the first day to the first person at
the right price.
At the right price, and I just cannot understand that this is 50 grand, to someone to save £50,000.
Yeah.
You're talking a couple of years, whatever, to do that.
Yeah.
Like, they don't, I think a lot of them just take, they're emotionless, and I think there is more to this game than just that, and maybe I shoot myself in the foot when I say stuff like that, but, for me, it's...
Well, what are people's misconceptions about the role a valuer plays? What do people assume you do that you don't, where they maybe come at you for, as if you can impact things?
I think they just assume that, like, I think they generally think that we actively either, depends on how they view us naturally, but I think we're there to, they're there to downvalue stuff and, just so the bank can lend less money or at a better term or whatever. Or other valuers or other brokers out there just see us as people that they can manipulate and try and get decent figures out of. And I've over the last probably year or so, I've become so much more kind of aware of that. I'll help and give advice where I can, but I just don't take the Michael.
Yeah.
And there are a lot that will call you outside of hours. Call you at 7, 8, 9 p.m. at night, and I was like, I'm fine for that, but don't take the mick. Don't ever ask me to put my career and my firm kind of on the line.
And I guess that's actually, in terms of, for people watching, what can you do to give yourself a best chance of good valuations? I guess it's being selective and honest with the pressure you're applying then. If it's urgent, say it's urgent. If it's not, let's get it done right, not rushed.
Correct.
I presume that helps you anyway.
Yeah,
breathe on it.
For me, the biggest thing I hate is when we get instructed on the matter, and I've gone through the valuation before we've said broker or whatever, and I've said, look, based on what you've told me, initially, I think you've got a good chance of this stacking up. I can't guarantee it, but I think you've got a good chance of it stacking up. You end up going to the property, and it ain't what they've told you it is. You've got like 22 people in one bedroom, and I was like. And again, ethically, like how I grew up, like it's a matter close to my heart. And I was like, I don't like people taking the mick out of the system, and it's just having that transparency with me at the start. You know, and how realistic is this? Are you honest? Do you honestly think it is actually worth that? Like,
that impartiality, how do you maintain that? Just staying honest to the numbers, just finding a way of justifying it?
Yeah, you have to remember that everything you do, it can get audited, you know, ultimately. And, you know, if anything, God forbid, was ever to go wrong, luckily we've never had anything go wrong. But if it was, you know, there's going to be paper trails, there's going to be everything. So you have to make sure that you're treating both sides fairly. You know, that is obviously the applicant and the broker, or free side, the applicant, the broker, and the lender. You know, all I can say to people listening is, with your value, treat with respect. You know, and if you do get a down value, there probably is good reason for it. But obviously, speak to other brokers, have communication, see, you know, where you're having success. You know, there are some really good firms, not just my firms. There are some other really good firms out there, valuation wise. There's some ones I don't necessarily like as well. But it's just having that communication, those relationships. And I always recommend having relationships with maybe 3 or 4 different firms. You know, just that by all means message me and I'll tell you who. But, you know, and it just gives you the best chance of getting the best deal for your client. Communication
is such a big one. Actually, on previous episodes, one thing we've talked about with others is the benefits of communicating well with your lender when you're in the debt. If something's going wrong, if you're growing your portfolio, if you're thinking about changing stuff, the same with your company structures, liaising and communicating with good tax advisor, your accountant, making sure you're on the right track. And it's no different, right? I think sometimes the valuation process is seen as a necessary evil. I want this money, and to do this I have to part with this cash, and they have to give me a number, and I hate it. And actually, if we communicate honestly and transparently, then we're more likely to get a fair
100%
outcome that we've got eyes on early, right?
100%, mate. Authenticity and transparency in this game is absolutely paramount to getting the results that you want. And for us, as like, I'd love to think that as a broker, where you speak to me on a deal, you can honestly tell me what we're actually looking at here. So when I do go there, I've got no shocks and no surprises. Because the last thing I want to be doing is delivering you bad news, saying it hasn't stacked up on what, you know, I think it is. And, you know, unfortunately at the moment, 9 out of 10 times it isn't the number that the applicants put in, you know, and I've got quite used to delivering that bad news. But it's the way you handle it and giving them a heads up, you know. And there's been times where I've started valuations up, we're actually taken the fee, I've actually inspected, and I can quickly see like that it's not going to stack, and I've stopped, and I've just called up the broker and said, look, I'll refund you because this isn't going to work. And I think that goes a long way. You know, it doesn't necessarily help the bank balance for us, but ethically for me, that's how it should be done. Yeah, and it matters to the borrower, right? Because ultimately, at the end of all of this, there is somebody trying to buy or remortgage a property who's spending money on the professional services around it, and you want to make sure it's the right process, right? Correct. Yeah, that's a good thing. Taking a step away from some of those challenges, what are some things that if I was a borrower tomorrow needing to remortgage, I'm confident I've got a good asset, what can I do to my property to make it attractive in the eyes of a valuer in terms of that'd be good for resale, that would go quickly? What are some of the bits you look for that stand out as so points? For me personally, the kitchen's always the biggest room for me. It's always the biggest drawer. It's the most expensive room in the house to sort out. Obviously, if you haven't done your kitchen, you know, it's just obviously very obvious things with Kim. Tidy it up. Cover any imperfections. I mean, I shouldn't say that. And before you go on with that, how often is that not the case? I mean, tidying up feels like a really basic bit for me, but I've had to tell clients before, make sure it's clean. Yeah, it seems obvious, doesn't it? Yeah. I mean, people, I'm not expecting like, you know, sparkling, but just make it smell nice. Smell's a big thing. And it's worth saying that because some people are going, oh, look past that, look at the numbers, but that's what a buyer would think, right? Correct. That's the human instinct of you walking in. That's what a potential buyer would think. Correct. And the reason a lender gets a valuation is in case if they have to take the property on and if the case they have to sell it. Exactly that. So that matters. Gardening, like just keep your front, you know, just keep it externally. As soon as the valuer walks in, they're going to be looking at it, you know, they're going to say, is this maintained or not? So it's all about like the psychology of how much someone values something, you know, and it's a very good point. It's how much was, you know, if you're going to buy it, what would you be looking for? What would put you off? And that is the best way to do it. You know, there's no kind of rocket science per se. We often get asked about valuation packs and stuff like that. Yeah. I like them personally. It's nice to understand where the applicants come from in terms of their valuation. Yep. Sometimes if I'm in the mind of the applicant, sometimes it helps me if there's sometimes it's a little tricky kind of, and don't make the mistake of just pulling right move comps that are on the market. So what are people giving to you there? So that's a good thing because some borrowers might be new to this or might not understand.
you're talking about somebody presenting you with a pack of their rationale.
Correct.
As to why they think it's worth this before you look and make your views.
Correct.
So what in there is useful?
So for me, obviously I know full well that 9 out of 10 lay people will just go on Rightmove, up for sale, high to low, pick the ones that cherry pick that suit their case.
Yeah.
I don't, unfortunately for them, as a valuer, and for Ricks, we don't really care about what's on the market for sale. We'll use it as maybe a secondary or kind of third resource if we're not sure on the value. But we look for sold comparables, ideally within the last 12 months, ideally within kind of a kilometre. It's again, the way I twitch it back to everyone is if, I value as if I was going to buy the property, and that's how applicants should look at it. Try and take the emotion out of it and say, look, if they were going to buy this property themselves, what would they be looking for? And that's a really simple way of doing it. But you'd be amazed that people don't do that. They always just send me for sale and Rightmove high to low.
Yeah.
It happens all the time.
Which is discarding basically immediately.
Correct.
Yeah. Okay. Makes sense.
Yeah.
What sort of stuff have you seen recently that's particularly interesting? I mean, you must have been into some wild properties. What have you seen in the market at the minute that people are transacting on that is interesting, that is different, that's caught your eye?
I'm really enjoying the care sector at the moment. Only this morning, I was working on a valuation of 9 flats that are being converted into basically serviced accommodation for children with disabilities. And the yields are unreal. And it's a good cause, you're helping kids that are suffering. But I'll try and keep the numbers as rough as I can. But the contract over these 9 flats was worth about 200 grand a year. And the actual rental amount, if you were to rent them, was somewhere in the region of about 80,000.
Wow.
So it's a huge swing.
Yeah,
and I know
massive.
care is, I think, probably going to be the new HMO. Side of things.
Well, there's a middle ground already, right? Because from our side, we probably see it. Maybe more than you do, or maybe you're less aware of those contracts but the social housing sector.
Yep.
So
I've got one myself.
Yeah, so they look like HMOs from the outside, but it's the contract and the strength of the lease, and that's sort of that hybrid in between care and social sort of responsibility, but also private rental sector.
It's unreal.
It's an investment. And
it's solid. A lot of valuers don't like those 5-year kind of contract, which surprises me because it's really secure. And generally in the contract, it's to put back as was when they took the contract.
Yeah, secure tenancies as well. They're great. And actually, if you do get those, it's an interesting one from me as a broker placing these deals with lenders and getting buy-in. The fix and repair clauses and making sure that the property's handed back to you in the same state you hand it to the provider is vital and gives you a level of protection that you didn't have before. Making sure a lender can get vacant possession, they have vacant possession rights, is really important. And then actually qualifying who's going into the property to make sure a lender has the appetite. But they are great. It's a great return. It's doing some good. There's some panels recently, housing for good. It's a really nice tag and something to be a part of. So it's a good model, and they're valued the same way, right? You're still just a property from a valuation perspective. It's an asset that someone can hold and can reinvest, can sell, can do whatever they want with, right?
100%. What I would say is, just based on an example I had today, is make sure when you are going to put in to your application that you have got the lease kind of signed already if you are going into that, because a lot of lenders that we work with don't really accept kind of hope value. So the hope that it's going to get signed, it's all well and good telling me that you've got 200 grand rent coming in, but unless it's signed, I can't value on that premise.
Yeah.
So that's just one thing. Do make sure that if you've ever put applications in, that you kind of dot the T's and cross the I. That makes no sense. Dot the I's and cross the T's.
Yeah.
So yeah.
And that leads on to something that's a really hot topic at the minute, because yield-based valuing in general, there's loads of education out there in the market at the moment. Lots of property mentors talking to willing borrowers, keen borrowers about HMOs and moving into the HMO game. And it's not just buying ready-made HMOs, because a good HMO isn't on the market. People are holding them. It's converting single dwellings into HMOs. They're often taking short-term finance to do that on the promise of a commercial valuation at the end, being able to pull all their money out. Now, that model is absolutely possible, which we've covered in previous episodes and generally in the market. But you're not always guaranteed a commercial valuation on a HMO. We've talked about it with lenders before. What, from your perspective, would give you a stronger case for recommending the commercial valuation on a HMO property? What are the sort of criteria that you would look for?
Yeah, so I mean, obviously the amount of rooms obviously is paramount. I think the lowest we've done one on is 5. We have done them on 5, and sometimes that is the right way of doing it. But generally we're looking 6, 7 or above. I can never say it properly, but sui generis, however you say it.
Yeah.
But ultimately, the things that we look at for whether or not it should be applied as a yield is we look at the quality of the conversion. How much material change has actually gone on to the property. Because a lot of time if it's had 6 en suites put in, it's quite a substantial amount of change. So take it back to a house, bricks and mortar doesn't really apply to it. It is going to be an investment method. The quality of the operator is now getting factored in a lot more. So we are often asking our lender clients, what's the history of this applicant, because obviously it is a very hot topic. Everyone's kind of jumping on it. But if you haven't managed a HMO before, how do you know you're going to be any good at it?
Correct.
And obviously the proximity to strong employment bases, i.e. hospitals, kind of town centres, big kind of corporate blue chip client, that kind of stuff, doing really well. We're actually, where I'm from in South England-on-Sea, is a prime HMO area. It's really strong for HMOs. And obviously don't expect generally really strong yields if you're a HMO investor and you do not take care of the rooms and the clients. Like that will get factored in for us. And then we are seeing that a lot, and a lot of time they're over rented and they are putting people in squalor. So I sound like some evangelical valuer here, but it doesn't help. If you're putting people in decent, good living conditions, the chances of you getting a better yield are going to be stronger because the risk of obsolescence is a lot lower. And what I mean by that, for anyone who doesn't understand, is with HMOs, there's a lot of people coming in and out. So naturally, there's going to be wear and tear and damage and stuff. And I think what a lot of people forget about HMOs is it's all well and good getting that really lovely, sexy refinance, which we all want.
Yeah.
But, because so many people come in and out, probably every 7 to 10 years, you have to redo it all again in terms of decor, new bathrooms and kitchens, etc. And it's not cheap.
Yeah.
So I know HMOs is really exciting, but just make sure you do your research and obviously speak to great brokers like yourself and just make sure you know what you're doing, because you are very much, and you couldn't be, of all the property investment opportunities, HMOs are the most dependent on the valuer, on that exit. It's all about the exit.
For sure. If you've done the conversion works yourself, you're absolutely right, because everyone's hinging on the massive uplift.
They don't sell, mate. There's no, and that is the worry for me, if I'm honest with you. I look at the market and I think, okay, it's been valued at this on an investment method. So valued as a business fundamentally, but my God, they never trade anywhere near what they're getting valued up for. And I'm not the only one in the sector that's raised this. I know a lot more lenders are pulling back a little bit on investment. But the lenders that are doing it understand it and get it.
Because it's interesting, because look, that's important to hear, because even if your view is naturally overly negative, let's say you're on the more pessimistic side, you're a valuer, so that matters. And the market is full of people with lots of confidence and being brave and finding ways to go into a deal going, I'm going to get an investment val, I'm going to get a commercial val. But they need to understand the risks, right? That it can be a 6-bed HMO, which is not guaranteed. 7-bed is different, because if you've got sui generis planning, it's different anyway. But if you're a 6-bed HMO, it could go either way. And it sort of is on the valuer and then the lender's interpretation of the valuer's comments as to whether they grant you that or you're back to bricks and mortar.
Yeah, our instruction will always come through bricks and mortar and or investment. And that's how it comes through. Now we do investment method, like we do it all the time. Based on lenders, what they want us to do, and if we can find the evidence, we will. But it is arguably the hardest part of valuation because there's no evidence.
And it's everywhere, right? It's still really, you must see a lot of those instructions.
Yeah, mate. I reckon at the moment we are maybe doing 1-2 a day HMOs.
Yeah, it doesn't surprise me.
We are doing investment, but it is just don't. When you're doing your calculations before you speak to yourself, like just make sure you kind of be a bit more conservative. If you get a lower yield, great.
Yeah. But
just be careful with it. Don't, because I've seen people go, they spend all of their money hoping to get like a 8% yield or I don't know what they're expecting, but say an 8% yield, and it might come out at 9 or 10.
Yeah.
So the tip is always to speak to your broker and just find out what lenders they're having success with that are doing, you know, and it probably won't be us, but what lenders are doing, who are having success with valuers that are doing good yields. And he's got to kind of play the game and work it backwards, because there are a lot of valuers that will just absolutely tank it.
Do you think, does it make a difference for you when you're valuing if it's within Article 4 or outside, or,
It does indeed.
or indifferent?
I mean, more and more, I mean, non-Article 4 is becoming rarer and rarer now. The one we done today was just outside of Ealing, and it's got Article 4 coming in December. And it does make a difference, of course it does, because it means ultimately there's going to be less HMOs, which is, you know, for the HMO owners, a better thing. Of course it is. And given the way the UK economy is at the moment, I think HMOs are a really good investment. Despite my pessimism is purely on the exit.
Yeah.
And, you know, I just don't want people just taking out all of their money all the time, you know, and then leaving themselves.
But as a retained asset, good model, and within Article 4, more chance potentially of that commercial valuation stacking up.
Oh, yeah, 100%. If it's Article 4, I mean, me personally, if it's 6-bed Article 4, you're going to get an investment method valuation out of me.
Yeah.
That's how we work. And, you know, like I said, we have done some 5-beds, and, you know, after discussion with the lender, so we'll call up the lender and say, look, very limited bricks and mortar, you know, comparables here.
En-suites on the rooms.
En-suite, massive material change here. So, you know, my personal opinion, you know, this should be an investment method here, because someone is going to come and buy this and just hold this as an asset for maybe a generational asset.
And how are you finding lenders receptive to those conversations broadly?
I mean, lenders are so varied. I mean, like, it is nuts. Like, I cannot, like, what you think one lender loves, you'll go to another one and they don't like it.
Yeah.
You know, and there is no hard and fast rule for them. We tend to find that certain lenders will be known for doing HMO stuff, and they were a lot more receptive to having a conversation. And
a good broker should probably be engaging with those as well, right? If everything has gone right here, the deal has already landed at the feet of the right lender, the right product, the right valuer, and everyone's in the loop on what we're looking for out of this. What sort of tips would you give brokers, to any brokers that are in the market, to work better with a valuer?
Good question. Like I said, for me, authenticity is a real big thing, you know, and I've become friends with a lot of brokers over the last couple of years, and I think valuers do see through that surface level facade a lot of the time. So cultivate actual proper general relationships with valuers, and so much so that you can, you know, if that valuer tells you that it's not worth that, you trust them and you don't push them, and that's what it is. Because that's the type of relationship you've got with them. You know, you trust their opinion, and just don't. I can't swear again, but like, just don't. You know, just don't bore them. You know, just tell them the truth. Don't lie to them. Don't let them get there and be embarrassed. Because ultimately, as well, a valuer, we don't love having to find a number. I think the valuation game would be so much better and completely different if we weren't told the sums.
Right.
So we all valuers went in blind every single time.
You think that'd be better?
Be Wild West, but but I'd actually be fascinated to see where values stack. Would it be higher? Would it be lower? I have absolutely no idea. I suspect it probably would be lower, but it's
broadly. It depends on the sales. If you've got obvious sales comparables, you'd like to think you're going to land on the obvious number, and no one would have over-egged that as well. But I think you're probably right. I think
it's weird. You're always working to a number. It's weird.
Yeah, it makes sense. If you could change one thing about how valuations are managed in property finance, what would that be?
Well, bloody hell. So many things. I think the main thing I would say is that I think lenders generally should have a diverse panel of valuers, you know, so that the broker don't get told just to use one valuer. I think there should be 3 or 4 that they're told to. Obviously, you've got Method and Fast, which are great as well. Yeah. But I think having a diverse team of professionals for lenders is huge. You know, some might sit on the more commercially minded side, some might be ultra cautious, and there's a space for both. Yeah. And doesn't mean the ultra commercial guy can't be ultra cautious. Of course they can. It doesn't mean vice versa. So what I would say is, I think for managing valuations, I think lenders should really take note of who the people are that are giving them the work.
That makes sense.
There you go.
And that's a good one. One thing that's interesting is you talked earlier about urgency, and look, borrowers are urgent. Everyone is urgent. Everything needed doing yesterday. Do you think across the industry that delays in surveyor availability are actually, or just property access, is that still a major issue?
Access is a pain in the backside, mate. It's really hard. Like, I can promise the world to you. You could say, Cole, can get to someone tomorrow. I could go there tomorrow, and it doesn't mean be able to get in, or people. And a lot of time when it's HMOs, for argument's sake, nightmare, because there's 5 different people in there who won't let you in. Yes, there is an issue with access and dates and times. A lot of it comes down to RICS requirements, because you have to have a chart surveyor go and do the inspection. I have my own personal views on that. I don't actually think that should be the case. I think people are very capable of, you can train someone very highly to go and do, a survey. But obviously we can't adhere to that, so we have to do, have to send charts of ours around, which is fine. And that's what causes the delays a lot of the time. So that is it's just the bureaucracy that comes with, not the RCS, but, just in terms of the red book requirements and stuff.
Well, I was going to ask you, how do you mitigate those problems? I mean, access is one thing. That's an organised borrower, right? Making sure that someone's ready to let you in. Yeah. Payment, okay, makes sense.
A lot of lenders will be like, don't go till they paid. Don't go till they paid. And then the broker will be like, why are you not being? I was like, well, they haven't paid.
Yeah.
No, well, they're going to pay. I was like, well, it's all well and good saying that. But if we do a valuation, they don't like it.
Yeah.
They could go, and the cost to actually chase debt as a business owner, as I don't know if you got, as broker, you may carry bad debt, but it's a nightmare. It's not worth it after time to chase the debt.
Yeah.
And they're the 2 main ones. And some just information, tenancy schedules.
Yeah.
Planning documents, schedule of work.
So the bit that matters here in terms of tenancy schedules as well, I'm guessing if you've got headline numbers, and the point for people to be aware of really and consider is, you might have granted access really quick. You might have let someone in, they've taken all the pictures, done the visit. But if they're trying to do numbers, algorithms, comparables, and they're not armed with all the facts, you're shooting blind, and you're more likely to have an inaccurate valuation.
Correct.
Whereas actually, if you provided all the passing information, that'd be much easier, right?
More information we have as valuers, the quicker we can get the job done. It's really simple. So again, that comes down to the brokers, in my personal opinion. They should be, because you'd be worried if they're submitting applications and haven't got that
Don't
data,
have that, having
that themselves. And like I said before, applicants lie. Just be honest from the start, and also other stuff, like when it goes, like obviously it's more of the broker side, but just lying about all the back end stuff, like credit and stuff, like that's going to cause delays.
Yeah.
So just all I can, if you're an investor or a developer, just be honest. Or, treat brokers like lawyers. To tell them everything off the start, and then it just speeds everything up.
Yeah. Do you think there's a rise in lenders? Well, there's borrower demand for this, but there's also lenders trying to get there, where technology is coming into the valuation process. We're seeing a lot more AVMs, which is an automated valuation model, or desktop valuations, or a snapshot of a figure for somebody to then action and borrow against. How is that helping or hindering the process overall? What are your thoughts on that?
AVMs, some are good, some are bad. We're actually jumping into that space ourselves, building on one for brokers to kind of find out feasibility beforehand. So I do see a value in it, but I also see how it can muddy the water, dupe the current values, for argument's sake. Simple algorithms, they tend to just work off the last sold price and then apply land registry house price data to it. And it's not necessarily.
It doesn't take into account the wider market.
No, there might be an absolute banging comp that sold 3 roads away that is absolutely perfect, but it's not necessarily going to take that into account.
Yeah, sure.
So I do fear, not fear is the wrong word. I'll be free. I would go and do something else. But I think it is going to become more and more prevalent. AI is huge now. I mean, we use AI a lot for kind of dissecting information, reading reports and titles. You can quickly. We use AI for our first stage of our audit before we send the reports out. So we've got custom AI that will review our reports, rank it out of 100 and tell us where we need to be to get it to 100. So that's what we do at the moment. So we're kind of trying to lean on it as much as we can. But you are going to see it more and more. And I generally do think the lenders that push AVMs are going to get a lot more work. The ones that do that, and desktops have become more and more important as well, I think. But then as a broker, if your client's coming to you saying I want AVM or desktop, it would raise a couple of red flags for me, what they're trying to hide.
Do you think we'll ever get the technology that's able to, because the beauty of the AVMs now is that they work for single dwelling assets, straightforward houses, whether it's a home mover or maybe easy buy to lets. Much more difficult to look at the HMO market, and that's taking away from like commercial valves. That's just bricks and mortar, because the work you might have done might not be factored in, or refurb jobs and things like that. Do we think tech is coming that can take that into account, that can help move that sort of arena quicker as well?
Mate, I've thought about this so many times. The issue we have with it is valuers don't tend to love to share data. So if there was a data set of all the valuers, and we'd happily participate in this as our firm, where your valuation for HMOs gets put into a data set and all the other firms put there, that's when you start to collate some nice real data, which would be quite easy at that point to populate an AVM. And people like your big firms, you know, that are knocking out, you know, 2,000-3,000 barrels a year, they could probably start doing it now. We could probably start doing one. But obviously, the more data you've got, the more accurate it can be, you know, and you can look at bricks and mortar. You can look at investment method, you know. And the way the reports are, you know, especially with AI now, it picks up keywords. So you can quickly see condition was poor, yield adopted 10, or, you know. So it can be done for sure, but it needs collaboration in the sector.
Which is easier said than done.
No chance, mate.
Yeah.
We would, though. If anyone wants to share with us, we would do it.
Yeah. Okay. Interesting. Well, you never know, right? Down the line, people will innovate, and they always sort of have proven that they can do stuff like that. I'll put you on the spot to sort of wrap up. What's going to happen to the property market next 12 months, next 18 months? Property prices up or down? What do you think?
It depends on what happens with the Labour government at the moment. I won't go too much into that one. But I think commercial is going to be the big trend. I think a lot of people are going to go mixed use and title split. And I think that's where the money is.
You're the second person on this podcast series to say that I think commercial is the way forward.
I know my stuff, yeah.
Yeah. And residential property value, you think potentially stalling?
Stalling. Do you know what? Things that are priced right will sell. Just because things don't sell doesn't mean the market's slowed down. It's because agents are desperate to win work.
Yeah.
And the easiest way to win work is to overprice something. And as soon as you tell someone a price, they've got that money. And if they don't get their money, they've lost that money, but they never had it.
Sure. So it always feels like a failing.
Yeah, but if you actually looked probably at the actual transactional numbers, it's probably just quite a nice steady rise.
Sure.
But people, when you hear agent, the market's rubbish. It's not. It's just because you've been lying to people, telling you can sell something for more than what it's worth.
Well, that's interesting. So market's slowly on the up, but more conservatively than people maybe are looking at it.
Correct.
But you think a diversification into mixed use, commercial, slightly different propositions, maybe the move forwards?
Correct, mate. Stuff like PD on stuff like that, you know, ground floor retail, adding in an extra flat there or not. That's what I'd be doing now. I think it's time to be creative. And don't necessarily believe all the trainers that you see online that are telling you can do buy a property with no money and stuff. Like, you still need to have some money to buy something with no money generally. So just be careful.
Which is absolutely great advice. And one thing we're trying to do here is educate from good people in the market transacting really well. So it's really interesting. It's been super helpful. It's been really good having you here as well. Thank you again for watching. Thanks to Colin and Project & Co for giving up their time and giving some great advice for you guys in the market. Tune in next time to catch up with more.